The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 8th of January. My pleasure to be here. And let's get straight to the numbers. Dow's up 164, 23,694. Made a high so far this morning of 23,864. This is very interesting. Let me show you why. Because look at the 120-minute chart. Remember yesterday we were talking about the tons of resistance levels all the way to 23,623. These are the Chapman Wave automated projections of resistance. Now the next ones are up in the 24,088, 24,185 level. We spiked above that, and now we're getting into just above those resistances. That, as I said to subscribers to my opening call this morning, that's the only way we could do it. In fact, what I said was, because we have a Dow 228 DIA January call, I had said to subscribers that if you have a couple of them, this is the perfect time at the open to take off at least one of them. That would have been almost 50%, 49 point something percent gain. Just take it off. And now we should start to see some kind of a digestive formation. Take a little time. If there isn't, and the Dow goes to the next level of 23,900, not only is that extremely positive, but now we're starting to break into areas that were on that terrible straight down descent in January down to the 21,712 level. So at this particular point, 21,700, we are 2,000 points above that. Very impressive. All right, let's get back to our story. Within the context of the waveform, this is leg C to the upside. Now, it's also very interesting. If you're looking at the Dow, it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions to do what it had done in 4. In fact, it hasn't even broken above the 24,000. I think it was 57. Let me just see. 24,057 level of the high of the 19th of December. So yes, this is really impressive. The MACD is good. Stochastic is still okay at 59%. I would prefer to see it up in the 70% level right now. The weekly chart has that V-shaped pattern. Once again, it needs to take out that high, that candle in the 24,000 area. But so far, so good. It is improving the stochastic. It is improving the on-balance volume. The MACD histogram is starting to improve, but the actual histogram itself is still very weak. Let's go to the S&P. SPX.X. The S&P right now is in leg. I think this is only B. I believe I'm correct in saying that the S&P is behind. I checked this 25, 20, 27. 25, yeah, this is leg B. So it's still early in the Chapman Wave form in terms of looking for that D where other things can happen. That would say to me that it's the same thing, that high of the 19th of December of 25.85.29, that needs to be taken out. And so far, the high today is 25.79.82. So the support level for the Dow is about 300 points lower, and for the S&P, it's at 25. Oh, I'd say 25.48, 25.48 to 25.42 short term. Let's go to the QQQ. So the Qs are up 0.56 at 158.64, struggling a little bit more than the others. In leg C on the upside, high today of 160.11. Now this has tackled, I believe, no, it hasn't tackled the 19th high of 160.72. The high today is 160.11. That is interesting. Very good action. but not good enough yet, but it is impressive. I like it very much. The support will be in the 156.80 to 156.20 area. IWM, now, the Qs are up 0.33%, and the IWM is 1.03%, very strong. I like this very much. The IWM, the Russell 2000 ETF, is trading at 141.06, up $1.47. Really strong breakout leg. C up above the 19th high. That's the 19th of December. The MACD's good stochastic is 63%. I like that. IWM is definitely outperforming on the downside. No, it's outperforming, thank goodness, on the upside, hitting the 14-period exponential moving average in the weekly chart as we speak, and that is that pink line right there. No, that's the 9-period. 9-period at 141.73. High today is 141.16. Got a little room to go, and then it bumps into resistance. Support is at 138.20 to 137.67. Let's go to gold. Gold deserves to have a bit of a breather. Yes, it's down 4, not a big deal. If it starts to take out 1276, that's the 14-period exponential moving average in the daily chart, then we're in for a longer and a bit deeper consolidation in gold. After all, look, the weekly chart was really impressive since it broke down mid-year last year. From the 200-period moving average in the 1330s, look what's happened. It plunges down to 1167, now rallies to the high just at 1300 3 days ago, down 15 bucks, no big deal, 1285 right now. Leg C, probably going to make a peak C to this week, we'll see. Getting this close to the 200-period moving average of 1363. My suspicion is it's going to go there and then go over it, just like the Dow Daily did. But it might need a little bit of a respite before that. And if that's the case, first let's look at silver, and then we'll look at the dollar. SSI is down 0.07 to 1568. Yeah, that's what we discussed yesterday. Peak E, and it should with the doji candle going below it today, makes the 15.80 level very strong resistance short term. No, near term. Short term, we're looking at 15.40s to be hit, 200-period moving average, maybe even the 14-period moving average of 1537 in a digestive phase. Now we can go to the dollar. The dollar was running earlier. Where is it right now? It's not too bad. It's at 95.89. Let's see. I had a message, and I don't know whether that's a good sign or a bad sign. All right, in the meantime, 95.89 with a high today of 96.03. You can see under the weekly 14-period moving average, it's digesting the big peak D gains. Peak F in the daily at 12 on the 14th of December at 97.71. So this is just part of the consolidation we've been talking about. Monthly chart still looks very good. Let's go to the EUR-USD, and that will be the euro is right now trading down at 0.003, 1.1442. Yep, it's had a nice rally, but you can see this weekly chart tells us that it's really important over the next 3 weeks for the euro to be up in the 1.158. That's what I'd say. And that would be impressive. At this point, it's just going sideways in a consolidation. Basil Chapman, Tiger Technicians Hour. I'll be right back after these important messages.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman, Tiger Technicians out, and Dow is up 100 and where do we go? 190. So this is going to be very important because the copper, that index that we're looking at right now, is rallying a little bit at 2.65. But I have to tell you, this is not a good sign internationally. It means that international countries, that is the countries themselves, are seeing slowdowns. I think that's represented by copper. And if that's the case, I really want to see the copper, as I said yesterday, I want to see copper moving into the 2.78, 2.83 area. I'd actually prefer to see copper going into the threes. Yeah, that's been a long time since that's happened. Goes back to July. All right. So now we need to look at a couple other things. The home builders, HGX, is rallying very nicely, or it was. It's up $1.44 right now. In the context of the weekly chart, that is good. The 264 level is the 200-period weekly EMA, and that is going to be strong resistance. There's been a lot of resistance going from 264 to 268. We'll see how it can deal with it over the next couple of weeks. If you're looking at the steel sector, SLX, now this has to do with China. If China can alleviate some of the pressure and you can finally see the steels start to move quite strongly, I would say that would allow for if high-grade copper is moving up, you've got the steels finally moving up. This is a leg C, and it is a very nice move because we've just filled the gap, that horrible, horrible gap on bad news back the other day from the 19th low of 36.95 to the high of the 20th, the following session, 35.50. We just filled it in. Today's high is 37.32. Good sign. Weekly chart still needs a lot of work. So these are big ifs, and I suspect this is going to take some time to unfold. That's really what the chart is saying. SMHs I was asked about, I'll look at that now. The SMHs are really not doing well right now, down 92 at 87.25. I've had no inclination whatsoever to get involved in the SMHs on the upside. I'm really waiting for another shorting opportunity for possible new leg down to test the 90.71 recent low. I can't see the semiconductors getting out of the morass until this first quarter is mostly over. Maybe it won't be the first quarter. Maybe it will be less than that. Maybe it'll be a couple of weeks. So far, it looks to me from the weekly and the monthly charts, it's not going to just be the first quarter. It's going to be a real big test of the I've been saying to subscribers, we're looking at the 87 to 85 area as the first really big test of strength. And so, sorry, did I say 87? I mean, did I say 78 to 75? 78 to 75 area. We're at 87 right now, obviously. That's not what I'm looking at. I'm looking at the downside. And 80 is the 200-period exponential moving average. And we've done that. In fact, this is a good example of a technique that I'm going to be teaching coming up on the 23rd of January, an all-day session. This is very unusual for me. It's an all-day webinar, give them once or maybe twice a year, where we're looking at studying the different Chapman wave techniques plus other techniques, but we're really looking at how to use these indicators. Look at this 200-period exponential moving average on the SLX, the weekly chart. Since it broke above, getting all the way back, let me show you how important this is. Just one little technical tool in my huge toolbox of techniques. Here we go. Oh, let me just move this over. Look at the bounces that it took. A test of 45.53 after going to 66 back in the summer of 2015, pulls back, hits the 200-period moving average, that orange line exactly, rallies back up to the 59, is that? Yeah, 56 area, and then pulls back to 45 February of, December the February the 12th, the week of the 12th of 2016. Remember, I always talk about these October, and you get these rotations through the market. Sometimes it's in the first quarter, January, maybe March even, of the first part of the year, or it's the October period where you get these cyclical lows. Sometimes they top, so it was a top in 2007. This case, it became a low in February of 2016 at 45.03, a tad lower, 50 cents lower than that original decline to the low in August of 2015. And look at that start to the move up. Boom, it bounces off. It has a little kind of a arch formation. Big arch, little arch, tested, orange line, hit, stochastic turns up, MACD turns up, and on your way, and what does it do? It rallies all the way in. Look at that. The black line is the 14-period moving average. Look how it was fantastic support. Look at the green line, the 9-period exponential moving average. These are techniques I'm going to be teaching in this webinar that's coming up. And now look what's happened. You made a full arch formation that went from the week of July the 7th, 2017, not 1917, 2017 at 80.92, rallies all the way to 114.55 in March of 2016. And then what does it do? It has a whole series of sideways movements. This is really perfect distribution. That rectangle formation, distribution. Doesn't make a new high, doesn't make a new low, and then all of a sudden it breaks down, takes out the 95.47 April low of 2018, and sullies down to the low that was made right here at 80.95. No, 80.71. So what does it do? By 21 cents, it takes out the July low. And look at the arch formation, and look at this beautiful plumb line. This plumb line means that was the top in the March of 2018, the week of the 16th, and it took the exact number of bars up and the number of bars down. In fact, it was about 3 bars early. Slightly took out the left side low of July of 2017, hit the 200-period moving average, and is now rallying. The MACD is still negative. The histogram's trying to improve, but it's not doing very well. And look at the arch formation, this potential W formation attempt of a rally right here in the stochastic. So this is all very important, and that's what I'm going to be teaching. How do you use these techniques? Here's a Chapman wave inside wedge target, support line, a lot of stuff going on. And I'm going to spend an entire day, 9 o'clock to 12 o'clock, first session, break for lunch for an hour. I will answer questions and stuff during that period unofficially. 1 o'clock we get back. We go until 4 o'clock, and then 4 to 4:30, we discuss what worked, what do we do, how do we succeed, what we do when we come back at 1 o'clock. I say, what did you want to achieve in this particular workshop, this particular webinar, this particular lesson? Because these are techniques that we want to deal with. We want to deal with it over and over during the practice session. Especially, I'll keep asking that question in the morning, and then we say, what are we still left with? And then we'll try to do it live the whole afternoon. How do we go from a 2-minute chart to a 5-minute chart to a 10-minute chart? That's like looking at the daily, weekly, and the monthly. I'll be right back. The Dow is up 233. Basil Chapman, Tiger Technicians Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so let's just have a look at the E-mini right now. The E-mini is trading up 16 at 25.66. There's been a beautiful, very how can I call this? This is like a bowl formation. Yep, a bowl formation. I like to think of this as the rectangle that can last a lot longer than your patience. Look, keeps going. And then it broke to the upside. It was very nicely. So it kept in the range. And then it was trying to use the black line, the 14-period exponential moving average to move high. It went to a peak F at the high today of 2581.25. Pulls back. This is a pretty big pullback. It went underneath that whole support level from the rectangle formation. It went to 2547.50. And lo and behold, right now we're at 2566. So parameters to watch on the day says a break below 25.45 will say that at least for now we've got a little bit of a hiatus coming, a little bit of a pullback. There should be some kind of digestive formation going on, and maybe it'll go into tomorrow, maybe tomorrow afternoon, maybe Thursday. We have to wait before there's another rally. Options expiration is not this week, right? It's the following week. 18th, yeah, that's right. So that we've got the option. I should know that. Now what we're looking at is on the upside. There should be a lot of resistance at the 25.75 to 25.77 area. I'm not sure that today we actually make a new recovery high above 25.81.25. But there are a lot of people that have missed this rally. They're just jumping in. And so for subscribers, we've been just trying to add to a long position for a week and a half. And, you know, it's just, you do your best because it's not fun to be buying gaps to the upside because all it has to do is take a little breather, pull back, take you out, and then it goes back up again. So you're going to have it's a little diabolical because you have to have a stop that's perhaps wider than what we normally have. So let's get back to our story here because I had a couple of questions coming in. Goldman Sachs, yes, we'll look at Goldman Sachs. Financials are having a little bit of a respite today. S is Sprint, right? Yeah, Sprint is, that's not what we're looking at. We're looking at GS. Goldman Sachs down $1.63. Yeah, I made a new recovery high. That's very important. It's in the uptrend line. Okay, let me put it this way. Goldman Sachs is still reflecting the very strong negativity. I mean, the lawsuits, there's a lot going on. And it has a high of 275, has a low in the 152 area. Let me just type this in. The exact low is 151.70 on the 26. 151.71, 51.70, 12.26. 18. All right, got that in. And we're trading right now at 174, having hit 178. That's 6 points, 6 points in a day. These are big moves to the upside for Goldman. At the same time, you haven't even hit the weekly 9-period exponential moving average of 180.86. So I can just say it's just not great action. And it's really a tip-off to say not everything is working, but at the same time, if you're looking at the XLU, which was the leader when the market was typed it in the wrong place. There it goes, XLU. In my secret location, I'm taping this. I'm doing this live here. XLU is 52.70 up 29 cents. Nothing to see here, folks. Just sideways pattern, but it had a spectacular run to the 57s, plops down to 50, and now we're trading at 52.70. Good digestive phase. Now, this is going to be very interesting. This is what I'll be teaching in my course. What in the S&P Select Utility Spider Fund, trading at 52.70, up 29 cents. The high was 52.73 back in, was it December of, where was this? November of 2017, 57.23. Drops to 47. That's a 10 point, that's a 18% decline. Then it rallies all the way back, and what does it do? It goes to a gray B. What is a gray B? A gray B means underneath the previous high, it fails. So it hasn't gone to a buy mode yet, even though it's a fantastic move from 47 to 57, 10 points up. It's got those 8% to the upside now. And then it fails. So what's the pattern that I will draw? Just easy. You grab that, you to the left side curve, right side to the top, and you've got yourself an arch formation. And it says, what's the rule of the thumb in the Chapman wave arch formation? That if there is a pullback 1/3 to a half of the original left side lip to the low, there's a really good chance that there's going to be a test of the low. If there's a failure of any particular candle or important support, well, the supports, we're at the support of the 14 and 9-period moving average now. We're actually under it. And I'll just make it simple. If the XLU, this is utilities, closes on a weekly basis below 50.81, there's a real good chance we're going straight down to 47.27. Will that help the general stock market? I would say it would give support to the market. Why? Because the one thing I've left out so far is the TLT, and the TLT is trading up 0.03 at 121.78, having made a PD in the Chapman wave just 4 days ago at 123.86. The weekly chart did go to, I'm calling this a leg C, even if it's a great XC, it's a spectacular move from 112 to 123, 11 points. That's about a 9% gain. That's very good action. That's helped the monthly chart as well, but it hasn't. The MACD has still got the whole month to close positive. The histogram's improving. So all this puts it together, because what I've been talking about is that if the TLT has a spectacular rally, we could see a very sharp decline as money comes out of the insecurity of equities, of the stocks, and goes into the so-called security of the bonds. Well, TLT is a 20-year Treasury bond fund. So that says that if at 121.78, if 2 out of 3 days you start to see a close under 120.87, my guess is that this market will go higher, the general market, as money comes back out of the so-called safety of bonds into the risk factor, and that's in the equities. So let's look at the VIX index. I was asked about that. I'll get to it. The VIX index, I will get to GE and LVS. I was asked about yesterday. I'll get to that right now. The VIX right now is pulling back. It is at 20.92. The moment it starts hitting the 18s, that's very good action. If it hits the 16s, this bull market is going to really roar to the upside. Meantime, back at the range, look at the weekly chart, one of the sharpest declines in quite a while. MACD hasn't crossed negative yet. Stochastic's still up at, no, the stochastic's now at 62%. So that's a help to say that the VIX index volatility index should be declining. Now let's go to LVS as we go to a break. LVS is Las Vegas Sands, and there's someone in Las Vegas right at this very moment just sent me a text to say that the show is innovative. It isn't cutting edge. It's just developments of products that were already in design. I'll be right back. Dow is up 176.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back. So we're looking at we'll go to LVS in a moment, but I had a question in the den about Tilray. Trading at, this is TLRY, trading at 78.85, up 6.95. It's a medical cannabis stock. Made all-time high around number 300 back in September of 2018. Has a little bit of a fall down to 65. And I would say that's a problem. But I do think that these stocks in this particular sector are beginning to show some signs of life. Yep, I do like it. And the answer is, I would say that my target would be how it approaches and goes over the high of the 19th of December, 82.39. 4 points away. I think it's going to break above it. I think this is back in play. The whole area of the 73s to 70, 73 to 70 is like a good cushion. It could keep coming back in this rectangle formation. So if it breaks and closes in the next 3 to 5 sessions in the 84s, that's very good action. It's in play. Now let's go to LVS. LVS is Las Vegas Sands. So this is what I'm going to also be teaching in my webinar. You see these charts? This chart looks fabulous. Look, a V-shaped pattern, trading at 56.49, makes a low in the 47s, and now it's 9 points higher. I mean, let's face it, that's a pretty good 20% rally right there. But wait a minute, the weekly chart says, geez, it was up in the 80s in the summertime, and now we've had a fall from the 80s to the 47s. What's this all about? Well, basically, I'd like to call this an oval pattern. And to make a cup formation, you're going to get rid, there you go, you got to get rid of a lot of this action. You got to either break below into the 45s or spiral above the 200-period moving average of 60.43 and show that there is now MACD's cross positive. That's working with price. So far, it's okay. It's not great. It needs to break above the candle of the week of the 7th of December, the high of 39.21. And the stochastic is running, but it's only 34%. But it's had a massive pullback. So this is very important, the action that's going on now. So LVS, the answer, okay, if I remember correctly, calls were bought and they were in position. So all I had to do was actually verify that, yes, I like it. If it closes above, anywhere above the high that was made back in December 11th, 56.40. Let's just say if it can close, is at 46.45 right now. Any daily close above 56, I want a security factor. This is not good enough. Let's go to 56.60. That's at 56.49 right now. Any close above 56.60 says, you know what? It's finally breaking to that very ugly candle back in December. That was the week of that was on the 4th of December. Opens at 57.80, goes to 57.95, 15 cents higher, and then says, uh-oh, wrong move, and slides all the way down to 55.15. And that was it for until it got down to the 47th. So that's the candle that you want to be approaching, and then you want to break above 58. I like it. If you're in it, I'll say good, but it's one of those that at any point could have a sudden slide to the downside. It needs to verify, it needs to have the veracity of the strength of being above as it is now, but it's only the second day of the week. Above the weekly 9-point moving average of 56.18 and no, that's the 14. The 9 is lower down at 54.06. So far, this is very good action. 55 to 54 should be a very good cushion. Now it's the monthly chart. So look at the time frame. Daily, whoa, nice. Weekly says, well, this is a start for a move to the upside. A good start. Not quite good enough yet, but a good start. And then you look at the weekly and you say, whoa. There's a lot more time before it can really get going, before it can start the big move back to the 80 level. MACD and stochastic need a lot of work. So let's do one step at a time. Daily good. So you're in the position. I think you have calls. And stay in the position. It's in leg C. I think it's going to go to a D, probably even an E. Weekly chart will give you information if you can get there, because so far the MACD and stochastic are working in unison with the price. I like that. So just remember 55 to 54 has to be a big cushion if there's any pullback in the next week and a half. Next question under was GE. So this person has GE. So let's see. Here's this very big arch formation, left side, right side, price time match. And this one goes to a particular candle that I like. And that was back in 2014. It starts March of 2009 at $5.73. We all remember that time very well. GE then rallies all the way to 33 round number high back in around about July or so of 2016. And that was it. Goodbye. The high was 42.50 way back in 2007. And now we're looking at a stock that just a week or so ago was in the 6.66. Oh, I remember that. Okay, 6.66. All right, we've got 6.66 as a low 2 weeks ago. And now you've got 5.73 was the low in March of 2009. So it's had a price time match. It's 1 month early that hasn't broken down below 573. This is very good action. So this person has the, what do you call those things again? They're not called, they're not calls. They're like way out in the money calls, but I'm trying to think what they're called. I can't find the email at this particular point. I'll try to find it during the break. But it is, you know, those vehicles, those things, that instruments you can use to buy if it was a call. Way out. And I think someone's giving me information and I won't be able to see it. Let me see if I can see it. Leaps, of course. Thank you very much. Leaps. Of course, I was wanting to, okay, Leaps. And say, where would the next entry be? Well, that was 3 days ago, and now we've gone from the 7.90 area to today's of $9.04. So it's still going from $6.66 to $9.04. Really good action, and this is still leg C. And this really has improved the weekly chart the monthly chart, and let's get out of this very long-term look at it and say the monthly chart with a doji candle, very often these are the perfect candles. You see this little candle here in the weekly? I looked at this and I said, I love this candle. I just didn't know if I felt like getting into GE, but look at the nice percentage gain. But yeah, I think that was it. I think this is a low of significance, 666, the week of the December the 14th. And not only that, it shows up in a weekly chart. You know how a monthly chart, you know how impossible it is to get a weekly doji at a potential low? You can look at thousands of charts and you won't find a monthly with a doji low of significance. So this has the potential to become a low of significance, and if it does, then I'm going to say to you, have patience. There should be some kind of a pullback towards, now it's the 780s. That's the level where I'd say you can add to your position. I think GE has turned, it is turning the corner, not out of the woods yet, but
the secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, we're back. So a couple of quick things just before we wrap up. Number one, Steve's got a webinar tonight. Steve, #1 timer. And, of course, don't forget, he does fabulous workshops. That'll be this evening. My workshop, the all-day one, is coming up 23rd of January. If you're really thinking about learning some of these techniques, you know, the course of a webinar, you're looking at, you know, 1 or 2 bad trades, and there it is. This way you get education. There's a whole bunch of things that go for you. GDX I was asked about. GDX is acting very well. I suspect it's in for a little bit of a breather here as the dollar attempts a rally. I think the dollar is going to still take time to consolidate. That allows gold to go up. I do think that gold is going to be, we must watch gold very carefully over the next 3 weeks because it's going to inform us about this first quarter and maybe a chunk of the year because it became extremely oversold. And will it get back to kind of a short-term overbought level? And then is it overall in a weak or a strong position? That's what we'll be studying. And we'll do the same thing with the dollar over the next few weeks. But most importantly, what we're really looking at is these time frames. So GDX right now needs to hold GDX trading at 2101. This is the gold miners, Vector's gold miners ETF. If it closes under 20.40, I think it's going to take a little bit of a breather, and that'll allow the dollar to rally somewhat. But I suspect that overall we're looking at the dollar needing more time to consolidate very big gains. So I'll be back with Tom a little later on this afternoon. I was asked a question about Raytheon, I believe it was. Yeah, Raytheon. Look at that decline all the way from the 220, I think it was 227-ish, comes all the way down to the 146s. I'm just saying to you, I've been saying it for quite a while, I think that the defense stocks, DEFENSE, not defense and defense like Procter & Gamble, but defense and Raytheon, I think it needs time. I think it needs a good amount of time. I said hat-trick top back in 2018, and I believe that that's still unfolding. It will come alive again, but I think it needs a little more rest period. Question I had, don't I think that the market has to do some retesting later? I think yes. I don't think any of these things are resolved, and I've also said that if you think China's going to have a response that everybody's happy with, their response is not our response. Remember, they can agree to a whole bunch of things and turn around and say, but that's different to what we were thinking. And that happens very often. So yes, I think there's going to be...
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.